No more recessions, no more high unemployment. Hello, my name is Edward Sonino. We need presidents with specific, detailed, workable solutions for our economic, social, and foreign policy problems, not vague plans and empty slogans and promises, as has been the case generally. That's why we never solve our problems. You can see the detailed solutions I would propose on my website, edwardsonino.com. After enduring a brutal, long recession with high unemployment, it should be clear to all that we need a president who knows how to prevent long recessions and high unemployment in the future. That requires a revolutionary reform of economic policy, the current one being outdated and ineffective, even counterproductive. In fact, it has not prevented recurring recessions and high unemployment. It has also led to an astronomical increase in government and private debt. Since recessions are always caused by insufficient consumer spending, my revolutionary economic policy reform would make QE finance tax rebates the standard tool for economic stimulus. Why? Because tax rebates increase personal income, and that leads to increased consumer spending. Clearly, the timely use of QE finance tax rebates would allow us to always prevent long recessions and high unemployment in the future, while maximizing economic growth. Why have the tax rebates financed by QE? Because QE financing does not increase the national debt by one dime. The reason QE financing does not increase national debt by one dime is that it consists of printed money, newly created money by the Federal Reserve, as I explain in my book, The Solution, which you can read in its abridged form on my website, edwardsonino.com. Although QE consists of the Federal Reserve purchasing newly issued Treasury bonds, since the Federal Reserve keeps those bonds until maturity, they expire and get extinguished at absolutely no cost to the Treasury and the American taxpayer. How is that? There's a big difference when the Federal Reserve buys and keeps a Treasury bond compared to when a private investor buys a Treasury bond. A Treasury bond held by the Fed costs the Treasury and American taxpayers nothing in terms of interest and capital, since the Fed is a government agency, and as such it returns all revenues, be they interest income or the proceeds from expiring bonds, to the Treasury annually. So Treasury bonds held by the Fed to maturity are not real debt. They are only virtual, cost-free debt that vanishes in thin air. Contrast that with Treasury bonds held by private investors. Those investors do not return to the government either the Treasury bond interest payments or the return of capital upon maturity. They keep the interest payments and the repaid principal upon maturity, meaning that Treasury bonds held by private investors are real debt, not virtual cost-free debt. How does QE financing actually take place mechanically, whether to specifically finance a tax rebate or to help fund the government's budget deficit in general, as has been the case in recent years? When the Fed buys newly issued Treasury bonds, it electronically credits the Treasury's checking account at the Federal Reserve with the dollar amount used to buy those newly issued Treasury bonds. So the Treasury finds its checking account balance increased by the dollar amount of newly issued bonds purchased by the Fed, and it uses its increased checking account balance to fund the tax rebates and other government spending, as the case may be. Now, this is how QE finance tax rebates would work to prevent recessions and high unemployment. Whenever the real unemployment rate rises above 5%, the President, together with the Federal Reserve and Congress, would determine how big a tax rebate would be required to quickly increase consumption and get the economy growing, with the real unemployment rate, which includes discouraged workers and part-time workers seeking full-time jobs, back down to 4% or full employment. Today, in February 2016, with the real unemployment rate around 8%, we need a QE finance tax rebate of about $2,000 per taxpayer. For some perspective, had the largely ineffective and unfair $800 billion Obama stimulus program in 2009 consisted exclusively of a QE finance tax rebate, each and every taxpayer would have received a $5,000 check from the IRS. a family of 2 taxpayers would have received 2 checks totaling $10,000. You can see how that would have immediately stimulated the economy by increasing consumption. The increase in consumption would have quickly ended the recession and driven down unemployment. And the housing crisis would have been stopped in its tracks, as families in financial difficulty would have had the means to keep current on their mortgages. Importantly, such a QE finance tax rebate would have been fair, since each and every taxpayer would have received the exact same stimulus check from the U.S. Treasury. Why do I say the 2009 $800 billion Obama stimulus program was largely ineffective and, importantly, unfair? It was largely ineffective because it did little to increase overall consumer spending, which is why the economic recovery has been so slow and so weak. And it was unfair because it benefited only a small number of citizens, and worse, it only benefited citizens who didn't need assistance. Low-income Americans didn't get one dime from the Obama stimulus plan. In fact, it only benefited people trading in gas guzzlers for new, more fuel-efficient cars, the Cash for Clunkers program, new home buyers, a few companies involved in infrastructure projects, and some state and local employees who didn't have their salaries reduced thanks to federal grants to state and local governments. Over the past few years, we have had $3 trillion of QE. But it was not the right type of QE, since it was only used by the government to finance our enormous budget deficits and to benefit the banks. That was necessary for the U.S. to avoid ending up like Greece, with 30% interest rates and a veritable depression, not being able to do its own QE. It's even had 30% unemployment and 50% youth unemployment. But what we needed in addition, in order to quickly get a strong economic recovery and low unemployment, was a QE to help the American consumers, a $5,000 QE finance tax rebate. So, QE finance tax rebates must become the standard economic stimulus tool. They are not only the most effective form of stimulus, they are the only fair form of stimulus, since all taxpayers receive exactly the same rebate check. And since they are financed by QE, they do not increase the national debt at all, as I have explained. Nor are they inflationary, when properly calibrated so as not to create excess aggregate demand. In fact, over the past few years, we have had over $3 trillion of QE without any increase in inflation, precisely because excess aggregate demand did not develop. QE has been used to entirely finance 3 years of our budget deficits. Why shouldn't QE also be used to finance tax rebates to prevent recessions and high unemployment in the future? There's another very important reason for having QE finance tax rebates as the standard stimulus tool. They would ensure that the Federal Reserve never again implements a policy of ultra-low interest rates. That policy, which is still in place after multiple years, is terribly unfair to savers and has serious negative side effects. It is unfair to savers who can't get a decent interest rate on their bank deposit savings, or on CDs, or even on Treasury bonds. As for negative side effects, that ultra-low interest rate policy reduces interest income, a very important component of personal income, thereby depressing consumption and economic growth. And it distorts investments, leading inevitably to dangerous bubbles such as in real estate. With QE finance tax rebates keeping the economy growing at a good pace, there is no need for an excessively loose monetary policy and ultra-low interest rates. Indeed, with QE finance tax rebates as the standard stimulus tool, monetary policy can always be neutral or normal, with the Fed funds rate kept at the going inflation rate, that is the 6-month trailing consumer price index rate. Today, that would mean having the Fed funds rate at around 2% instead of at practically zero, as we have had over the past few years. That would mean having bank deposit rates and CDs at around 4% today instead of 1%, and Treasury bonds between 4% and 5% instead of between 2% and 3%. Furthermore, By using QE finance tax rebates as the standard stimulus tool, we will always have a strong economy with full employment, and consequently wages will rise naturally, the free market way, along with profits and productivity. That is the only way to have wages increase without reducing employment, as instead would clearly happen with a government-mandated increase in the minimum wage. Imagine you are a business owner with some employees earning the minimum wage. If the government raises the minimum wage, you will naturally try to offset your increased labor costs by reducing the number of your employees earning the minimum wage. If, on the other hand, the economy is strong and your profits are rising, you will want to grow your business. So, you will not only increase your employees' wages, but hire new workers. That's how the free market works. But for it to work well, we need the right economic policies, which must include having QE finance tax rebates as the standard stimulus tool. That is the best way to help all Americans. The key to improving the living standards of low-income and middle-income Americans is a strong economy with low unemployment, not government increases in the minimum wage. So remember, to prevent all recessions and high unemployment in the future, what we need is to have QE finance tax rebates as the standard stimulus tool. Just think of it. No more recessions, no more high unemployment. Ever again. Just sustained economic growth at our highest potential all the time. No lost production, no lost wealth creation. No more enormous increases in government and private debt due to recessions. The misguided economic policies we have had up to this day have been due to caveman economics, to primitive, ignorant, unenlightened economic policies which have led to repeated long recessions, high unemployment, and skyrocketing debt, all of which were completely avoidable with the right economic policy, that is, having QE finance tax rebates as the standard stimulus tool. I hope you're now convinced that having QE finance tax rebates as the standard stimulus tool is the key to sustained economic prosperity for all Americans, and that you'll demand its adoption and want to vote for it. If instead you're skeptical, thinking it all sounds too good to be true, it's not. Once we adopt QE finance tax rebates as the standard stimulus tool and see the amazing results, everyone will wonder why it took so long to find the right economic policy, a truly enlightened one. Hopefully, it will soon become clear to everyone that we need QE finance tax rebates as a standard stimulus tool, and it becomes the law. Thanks for listening.